the Bombay Stock Exchange, where Neeraj has two special guests, SUNDEEP SIKKA, who's President and CEO of Reliance Capital Asset Management, and SUNIL Singhania, who's CIO, Equities at the same fund house. A marquee name. We had ICICI Pru in the morning, and now one of the largest AMCs in the country with their house view. Neeraj, all yours.
You said it all, Tanveer. It doesn't get bigger than this as well, and we're calling it, in a manner of speaking, we are calling it a mutual fund day at the BSE too, on the BSE day. And yes, Sundeep and Sunil with me right now to talk about their house view on the markets. It's also an important landmark year of them for sorts, so we'll talk a bit about that as well. Gentlemen, thank you so much for joining in. Sure. And it's a pleasure having you, and of course we'll ring the gong as well with you guys. But just a thought, Sunil. Let's start off with the market since it's just about 25 minutes to close. From a week of complete inactivity, we are reaching a week of heightened activity. GDP numbers today, RBI policy tomorrow, a lot of other central banks going to announce their policies as well. And this may have a short-term feeling, but we might also see some resolution on the GST, hopefully. Yeah, how are you viewing what's happening in the markets currently, both global and local?
So one is obviously, as you rightly said, that things have been pretty volatile and uncertain. However, one interesting thing, Neeraj, is that a lot of these uncertainty has already been over-analyzed, over-discussed, and maybe it's all there in the price. So whether it's the US Fed hike, I think for the last 1 year we've been contemplating whether the US is going to increase the rates or not. Everyone is of the view that they are ultimately going to increase the rates. So maybe it's already there in the price. As far as RBI policy is concerned, I think the expectations of a rate cut this time are hardly there. So again, there is nothing which is going to worry the markets as such. In terms of GDP numbers and all, I think the direction is very clear that this is a year of consolidation, and maybe in the next year and the year after, you'll start to see India inching up as far as the GDP numbers is concerned. On the GST front, again, it was all lost. However, the last few days, the news flow has been pretty positive. So as we move ahead into December, there is a lot of optimism, and we share that optimism.
Well, and Sundeep, maybe retail investors are actually fueling that bit of optimism, giving mutual fund houses such as yours the wherewithal to kind of support the market as well. I believe it's an important year. I think it's the 20th year for you guys as well. How is the flow situation looking like currently? What's the difference that you're seeing, and how do you think the next few months look like for the current fiscal?
Yeah, I think that's right. I think we just completed our 20 years. Yes. I think we have clearly, the good thing is, I think the weekly analysis that you talked about, which is happening on the stock market, investors have stopped doing that. Yeah. The retail investors, they have started appreciating the long-term track record. Yes. I think as we complete our 20 years, our two flagship funds, Reliance Growth Fund and Vision Fund, these were the funds which were launched way back in 1995. The 1 lakh rupee invested in 1995 today is almost 80 lakh rupees.
Yeah, one of my colleagues, Nikunj, has one of the schemes as well.
Yeah, he's got one of, he was telling one of the few initial investors, and he's got the certificate till now. Yeah. So we need more investors like him in India. But I think it gives a lot of sense of satisfaction to us as a fund house that we've been creating wealth for investors over a longer period of time. But what is more interesting is we have seen the investors change. Earlier, the psyche of investors used to be, they used to track short-term performance, what's happening in the 6 months, last 1 year performance. But then we started appreciating how the wealth gets created over a longer period of time. We have seen investors who have invested for more than 10 and 15 years, and they've gone through different market cycles. And that's what is also differentiating different fund managers in the industry.
Yes, certainly it's showing in the performance of Sunil as well over the years. Sunil, I think it just helps if you have a lot of long-term money. But let's assume that it's going to be staying out here, Sunil. That money that comes in will probably stay for the longer term as well, and hopefully will aid performance too. You seem to be confident about the market, ignore what's happening in the short term as well. What triggers this uptick now? I mean, earnings have been a washout. We haven't quite seen anything coming in the first 2 quarters. Next 2 quarters seem to be a washout as well. What will trigger this uptick as and when it does happen?
So Neeraj, I think history tends to repeat itself. That is what our view is. So when you look at the other parts of the world, when a country starts to grow, it grows rapidly for at least 30-40 years. We have seen that in the US earlier. We have seen that in Singapore, Taiwan, Korea, Japan. Sure. I think the years of fast growth in India are only 10 years old. We believe that for the next 20 years, India can grow upwards of 7-8%. And what it would mean is that, for the first 60 years after independence, we reached $1 trillion in economy size. The next trillion, we took only 7 years. And our view is that the next 2 trillion will take only 7 or 8 years. So what we have created over the last 67 years is going to be duplicated over the next 7, 8 years.
Right.
That's an additional $2 trillion worth of wealth creation opportunity. So I think the big picture is that. And all this near-term 1 week Fed rate hike and GDP and GST, I think they are all pegs in the overall long-term.
So let me ask this to you. Aside of investing in the schemes of Reliance AMC, how can a retail investor look to position, assuming that there are viewers right now who are wanting to position their portfolio, they believe what you're saying, that India will grow, the GDP growth will be 7-8% as the case may be, or maybe even double digits if GST come into play. What would Sunil Singhania advocate as an ideal investment strategy? Buy into the stocks which may not be doing that great right now but could be winners, economy related, or stick with the tried and tested and the safe ones?
No, I would say that invest in mutual funds, because what they would try to do individually, that is what the mutual fund managers would be doing, right?
Yeah.
And as an individual investor, as a retail investor who is not 100% or full-time into equity markets, it will become very difficult for that investor to track the way a professional investment manager would do.
Sure.
And 80 times in 20 years, it's not a small return, it's a much bigger kind of a return.
So
I think, a retail investor need not go into individual stocks, frankly. Yes, if you are a ultra HNI and if you have the resources and if you have a full-time kind of an attitude towards the market, then you might think about buying stocks individually. But otherwise, getting the best professional manager at 1% a year, it can't be better.
Oh yes, one of them, or the house sitting in front of me as well. Is there a change, Sandeep, in the way money is coming in? Because I think we were having this conversation that the nature of how people are investing, or the areas where people are investing in funds as well, is changing quite rapidly.
And there is a big change that we have seen. Earlier we used to see a lot of money used to come when the markets were going up, a lot of lump sum money used to come. I think there's a change in the investors, how they see capital markets. Over the long period of time we have seen, if we were to take this between 2003 to 2008, majority of the money used to come in NFOs, majority of the money used to be momentum, and now more money is coming through systematic investment plans. We have got 80 lakh SIPs coming in the industry, which effectively means roughly about 3 to 4,000 crores every month is coming into the capital markets. The systematic investment plans which are coming, they are coming for a much longer period of time.
Sure.
We used to see earlier, whenever the markets went down, systematic investment plans used to be discontinued.
Yeah.
We are seeing the opposite of that. New systematic investment plans are getting added. And also another thing that we have seen is recently, like we launched a retirement fund. A lot of investors are committing for long term, for 20 years, 25 years. This had never happened before.
Yes.
So this is, it's about two things. A is the investors' faith in the capital markets, and B is also they've started appreciating the asset management companies which have a long-term track record.
Yes, they do, and trust me, a lot of people in our office have started doing that as well. We made a lot of people, irrespective of their earning capabilities, to start investing money and take part in the Indian capital markets drive as well. But Sunil, I'll try one. I'm guessing Tanveer would probably have a question as well, but I just have one last question for you. I take your point that retail investors should go out and invest into AMCs. That's probably the right way and a safe way and a mature way to invest. For that person who is also a bit of a risk taker, because we've got all kind of viewers and they're watching you right now as well, what's the ideal spaces where you believe investments can be made?
You're talking about sectors or something?
Yeah, I won't ask you about stocks, obviously. So, but themes. It need not be sectors. It could be themes that you believe could do very well.
So, very clearly, one good thing about India is that it's a diversified country. So you have almost every sector and every theme which you can play. Again, our view is that, the way the economy is growing and the way the habits are changing, I think the themes which maybe were very good in the past few years might not be the same. And our view is, apart from the regular e-commerce and those kind of things, we believe that there is a shift towards a pattern of consumption. People want to look good, people want to wear good. So maybe brands can be one good theme, which is right now small, which can be big. Urban consumption is really showing signs of picking up. So
it's been there for a while. You believe it can continue as well?
Yeah, you see the four-wheeler sales, you see the two-wheeler sales. What we hear that on the retail side also, the sales in October and November have been pretty decent compared to what we saw in the quarter ending in September. So that can be a good theme. I think finally, a lot of government spending is actually starting to show signs of happening. Earlier it was only talking. Now I think it's walking the talk, in some sense. So whether it's railways, cement, new cities are being constructed. In Andhra, there's a new capital which is being constructed. Yes. So, well-managed companies with decent balance sheet who have the strength of executing large projects, maybe those are the companies which again can do really, really well, you know.
You don't seem to be in the camp which believes that you could buy into distress heavily. Companies which have a track record but are in distress right now, because they could actually be the turnaround stories of tomorrow.
So we would say that companies where we feel will have the capacity to survive, we would look at them. But there are companies who might be in distress, but according to maybe our analysis, they will continue to be in distress. There is no use of buying them. You know, you'll have a dead cat bounce and then again they will have a problem.
Okay, just before we sign off this interview, and then of course we have to go for the gong as well, but excuse me for being a bit probey on this. My question then to you is, where do you believe distress could show a turnaround? What theme? I mean, you know, so many people talk about real estate, so many people talk about infrastructure, so many people started talking about a small space called sugar as well. Now, there's so many pockets which are in distress, which a lot of people believe could do well. Sunil Singhania, what does he believe? What does Reliance AMC believe is the theme?
So actually, if you see, you know, a sector like textile, which was in distress, has already turned around.
Yes.
You know, overall, there might be some companies across which might have a problem. Then you had chemicals, which at one point of time was not doing as well. Now it's doing very well.
But looking at the theme, or exporting theme for the next one.
I don't know about the theme, but it's doing quite well.
Yeah, all the
so, you know, there might be some companies in construction. Maybe in utilities, the turnaround might be faster because the government is very focused there. So you have Uday, you have the power reforms, you have interest rates coming down, you have a resolution at least on the raw material front. You know, you have companies who have ready power plants and the government is trying to subsidize them, the gas-based power plants, you know, where there's a pooling of gas. So maybe the utility space would be the one space which might turn around the fastest.
All right, that's sounding like a common theme. And Sundeep, we said it in the morning as well, just for the benefit of our viewers who are probably listening into it right now. The kind of returns that Reliance AMC has managed to deliver the last 20 years, this is the 20th year you finished. What's the kind of returns?
I think we've given in returns in excess of 25% CAGR. So 1 lakh invested in growth fund is 80 lakh rupees. So effectively it's about 4 times every year. The money is doubled 4 times every year. And I hope, I'm sure, I think we remain committed after 20 years also. Our passion, our commitment is the same to keep creating the same kind of wealth for investors going forward also.
Yeah, and you're doing a great job. So history may not repeat itself necessarily, but if the past is anything to go by, they are delivering handsome returns. And it might be the best way to invest for a retail investor. Thanks so much for this interaction, gentlemen, and of course we'll ring the closing gong with you as well. Tanveer, it's back to you in the studio.
Well, it seems like DLF is resolving its past issues, Neeraj. As you were just talking to Sunil Singhania, we had this important flash come in where the Competition Commission of India has dismissed complaints against DLF group firms. That's PTI quoting about 1.5% higher on DLF. You know, we're just going through some past